Imagine you wake up tomorrow, check your portfolio, and see your crypto cushion cut in half overnight. Your dreams of early financial freedom slipping through your fingers. That's the warning from Dave Ramsey, one of America's most trusted financial advisors, clamoring, "Sell your crypto now." Is he overreacting, or is this your alarm bell? Do you want to gamble with volatile assets, or build real, lasting wealth? In today's video, we'll unpack exactly why Dave Ramsey is pushing this alarm, what it means for you, 18 to 34, hustling, ambitious, and determined, and whether selling now is smart or just panic. Stay with me, because by the end, you'll know whether to hold, fold, or walk away. Let's start with Ramsey's first and perhaps most fundamental concern. Crypto, including Bitcoin, simply doesn't have a proven track record. Think about it. The U.S. stock market has been around for over 200 years. Real estate? Even longer. These assets have been tested through wars, recessions, and technological revolutions. But Bitcoin? It was born in 2009, barely old enough to drive a car. And in that short life, it's been a roller coaster, wild swings up, gut-wrenching crashes down, fortunes made overnight, and fortunes lost just as quickly. Ramsey sees this not as investing, but as gambling. In his words, crypto is volatile and unreliable, and he's right that it doesn't produce earnings, dividends, or cash flow the way a stable business does. The value comes from what someone else is willing to pay tomorrow, not from an underlying stream of wealth. Now, for young people chasing freedom and wealth, that's a tempting gamble. It feels like a shortcut. But Ramsey's warning is sharp: be careful not to confuse speculation with security. You might be on a rocket ship headed for the moon, but rockets don't have parachutes. If it explodes, there's no soft landing. And here's the thing, volatility by itself isn't always fatal. Even stocks can swing. But Ramsey isn't stopping there. He's pointing to something deeper, something he believes makes Bitcoin even riskier. So why does he go as far as saying sell now? Let's dig into his next warning. Ramsey's second warning cuts to the heart of his financial philosophy: stability before speculation. His playbook is simple: pay off high-interest debt, build a safety net of 3 to 6 months of expenses, and create predictable income streams. Only then, he says, can you even think about riskier plays. Now, imagine you're sitting on $5,000 worth of Bitcoin, but you're also drowning in credit card debt charging 25% interest, or you couldn't cover a $500 emergency tomorrow without panicking. In Ramsey's eyes, that's a ticking time bomb. The crypto might look like your ticket out, but in reality, it's making your foundation weaker, not stronger. He even told a young couple recently to sell their crypto holdings, not because he believes Bitcoin itself is doomed, but because their situation was. By cashing out and paying off debt, they could trade speculation for stability, avoiding a future where one bad week in the markets could mean financial collapse. And for many people in their 20s and early 30s, this warning hits home. Student loans, rent hikes, rising living costs, maybe even starting families, instability is everywhere. Ramsey's message is blunt: don't build your dreams on a house of cards. Think of it like this: you're out buying avocado toast and lattes, secretly praying your DeFi token moans tomorrow so you can cover rent next week. Sound familiar? That's exactly the trap Ramsey is waving the red flag over. So if instability is one side of the coin, what about the forces outside your control? Because Ramsey warns, there's a darker danger looming, one that could make all of this even scarier. Ramsey's third warning takes us beyond personal finances and into the world stage, the shifting tides of regulation and government oversight. And here's the reality: crypto doesn't exist in a vacuum. It's at the mercy of rules, policies, and crackdowns that can change overnight. He warns about governments imposing stricter taxes on crypto gains, regulators forcing tighter controls on exchanges, and even countries banning or restricting mining over energy concerns. These aren't abstract what-ifs. They're already happening. Exchanges have been shut down. Miners have been forced to relocate. Ordinary investors have suddenly found themselves locked out of accounts or facing unexpected tax bills that wipe out their profits. And markets? They hate uncertainty. Each new headline about a tax probe or a mining ban can spark panic selling. Liquidity dries up. Prices collapse. If you're heavily invested, or worse, leveraged, you could find your financial foundation evaporating in hours. That's why Ramsey's voice is urgent here. Don't wait for the storm to hit you. Ask yourself, when the regulators tighten their grip, will you be prepared to stay dry, or will you sink with the flood? And here's where it all comes together. Because Ramsey doesn't just issue warnings, he offers a path forward. In just a moment, I'll break down what he says you must do today if you take his warning seriously, and whether there's any room for crypto in a wise investor's portfolio. But first, here's something surprising: Ramsey isn't completely dismissing crypto forever. In fact, in recent months, he's admitted that he could see it as legitimate, but only if certain conditions are met. And let's be clear, those conditions aren't here yet. What would it take? First, wider institutional adoption, banks, pension funds, and governments treating crypto as a serious asset, not a fringe experiment. Second, clear regulation, where investors know the rules of the game instead of constantly fearing a sudden crackdown. Third, time. He wants to see decades of performance, not just hype cycles. And finally, reduced volatility, where Bitcoin behaves less like a meme and more like an asset you can actually analyze with fundamentals. Ramsey also stresses proportionality. If you must invest in crypto, he says it should never be your foundation. Maybe 1 to 2% of your portfolio, something you can afford to lose without losing sleep. Not 30%, not 50%, and definitely not your emergency fund or rent money. So the takeaway is this: Ramsey isn't condemning every crypto holder as reckless. What he's really warning is that too many people are overexposed and underprepared. And if you're young and chasing wealth, that imbalance can turn your dream into a nightmare. So the big question becomes, what do you do now, especially if you're in the exact target group he's warning? That's where Ramsey's final, practical advice comes in. So the million-dollar question: should you sell your crypto? Ramsey's answer isn't about panic selling or blind faith. It's about stepping into wisdom, especially if you're in your 20s or 30s and determined to build lasting wealth. Here's what smart action looks like right now. First, assess your risk exposure. Be brutally honest. Do you have 3 to 6 months of expenses saved? Can you handle a $1,000 emergency without going into debt? Are you still carrying high-interest credit cards? If the answer is no, then it doesn't matter what your crypto is worth today, because one crisis could wipe it all out tomorrow. Second, rebalance your holdings. If crypto is 30%, 40%, or even 50% of your net worth, you're walking a tightrope without a safety net. Consider scaling down. Lock in some gains. Use part of it to pay off debt, strengthen your emergency fund, or invest in proven vehicles like index funds or real estate. That way, even if Bitcoin drops tomorrow, you're still standing strong. Third, stay informed and flexible. Crypto isn't disappearing. Regulations are evolving. Institutions are paying attention. If, years from now, Bitcoin matures into a stable, fundamental asset class, you'll have another chance. But don't build your financial life today on hope and hype. Picture yourself in 5 years. You're not the one who lost it all chasing a pump, you're the one who made confident, calculated moves. The one who built wealth step by step, without regret. That's the power of being intentional instead of impulsive. And here's the kicker: in just a moment, I'll show you one timeless investment strategy Ramsey does trust, one that most young investors overlook. And it could shape your financial future more than any crypto pump or dump ever could. Here's what Ramsey would stand by, no matter what the headlines say: investing in growth stock mutual funds or index funds, long-term, diversified, low-cost. Historically, these have delivered returns that, while not as flashy as a crypto moonshot, are far more reliable. For example, the S&P 500 has averaged roughly 7 to 10% annual returns, after inflation, over decades. Lower upside? Perhaps. But massively lower downside compared to riding crypto swings. Also, paying off debt, building emergency reserves, real estate, and investing in yourself, skills, income growth are foundational. These don't get the flashy attention, but they compound. Ramsey says these give you leverage in life that a volatile coin doesn't. To sum up, Dave Ramsey's warning isn't clickbait. It's a wake-up call. Sell now? Maybe for many. But more importantly, position yourself wisely. Don't gamble away security. Don't let FOMO drive your choices. If you follow smart money habits, clear debt, build safety nets, invest with consistency, you'll be ahead whether Bitcoin crashes or rockets. If this video opened your eyes, hit that like button. Subscribe to this channel for no-nonsense financial insights. Share in the comments, what's your crypto exposure and how are you managing risk? I'll be diving into your stories in future videos. Let's build wealth smartly, boldly, and for the long run.